Hi, everyone. Chris Johnson of Money Morning here talking about Netflix today. The company's earnings are coming up Thursday after the close, and I think it's a great opportunity for short-term traders. You're going to see a 15 or 20% move. I'm going to explain that. But more importantly, I'm going to explain this chart. This chart is the reason that Netflix is one of the best opportunities in the NASDAQ 100. This chart is the reason that Netflix is going to be trading above $1,000 in the next year and then continue to move higher. Stick with me for 10 or 15 minutes. I'm going to unwrap this entire situation, the analyst's expectation, the stock chart, everything, and show you the huge opportunity in Netflix. Let's get into it. All right, so this is a two-part story about Netflix. It's both for the traders out there that are looking over the next couple of weeks and the long-term investors that are looking for a stock that's going to return 50, 60, 70% a year. Netflix fits the bill for both of them. So I'm going to break it into two stories for you. Let's do the first one on trading Netflix and the earnings expectations coming up here for Thursday. So here's a chart of Netflix over the last 6 months or so, and there's going to be one thing that sticks out right here. Stock jumped 20% over the 2 weeks following their last earnings report. That was in January 23rd of 2024, right? So the stock is showing the potential right now to make these huge leaps. Why is that? A lot of people are saying, well, it comes down to the expectations. This is last quarter, and this is the story told, so I'm going to go through it real quickly. But what you saw from the company was 8.8 and some change in terms of the revenue, 8.8 billion in revenue, right? That represented a 12.5% year-over-year growth. That's where this story lies, and especially feeds the long term. So they beat on the revenue number. When you look at what they actually did compared to expectations, the analysts had it low in terms of that revenue number. 8.8% was the quarter before. Now they're up to 12.5%. The company did miss on the earnings per share. Everybody looks at earnings per share and says, oh, that's the meter beat and that's what you need to trade off of. Not the case here. Earnings per share missed expectations. Now, there's a story to be told in between the lines here, as I say, the revenue and then the bottom line earnings per share. And that is that the company has gone through a transformation over the last couple of years, and it's starting to play out in those numbers. The short term is just catching up with that turnaround, though. Remember, Netflix turned around and started to add that advertising model. And they were suffering on the revenue side. They saw their subscriptions going lower. All of the things were telling them they needed to make a paradigm shift, and they did it. Brought Microsoft on board, the advertising model, and it's now paying off with that revenue. Also, at the same time, they started to do some cost-cutting measures in 2022 and into 2023. And it is now going to trickle down to that bottom line, the earnings per share, and that's where you get the outperformance here over the next couple of quarters, because the analysts right now are still a little bit short in terms of their expectations. Let's take a look at what they're guiding for in terms of this quarter. We've seen 20 of the analysts start to raise their expectations or their earnings per share target. And we've seen the revenue target go up a little bit here, looking for $4.54. Now, those are all numbers, and it comes down again to expectations. I always like to say, and you saw it last quarter, you can have a bad earnings per share number and you can still beat expectations. And right now, the story is the catch up here. So this is the last 5 years. Last 5 years of post-earnings performance along with the expectations and the actual results. It's a busy chart. Let me walk you through the real good points here. Here is your trend that you're seeing in those analyst expectations, and you're also seeing the company, that orange line, their earnings per share, beating or outpacing that, right? I want you to look down here, though. This is what's interesting. Over the last 5 years, the company's basically been a coin toss in terms of whether or not they perform well or poorly after earnings. You can see a really long period here where those red bars, that's the 2-week return for Netflix, have been negative as much as 42%. We remember that happening back in 2022. That's when the company was really showing us some subscriber numbers that were lacking. It was all about the subscriber numbers. They don't focus on that so much because of the advertising model. Now we're seeing those trends come up in the expectations and the results, and you're seeing some positive returns. Now, Go back to that, though, the coin toss. This is the other thing that makes it very interesting for me. If you look at it as a risk reward, the risk and the reward have been the same. So about 11% lower on the stock or 11% higher. So Netflix, from the street's perspective, has turned a little bit into a coin toss. People don't want to take that chance, right? So they back away. They don't take advantage of the opportunity. And that's why you're getting these huge moves after earnings. This quarter, I believe, is going to be, again, another carbon copy. So what am I looking for here? Here's your last quarter. We saw that 20% move. I think you look at the same thing. Three things from the technicals. Remember, I said technicals, sentiment, and the fundamentals. So far, we've marked off the fundamentals and the sentiment expectations, not ahead of Netflix here. But the technicals are one of the most compelling parts of the story here. So if you look at this, and I'll explain the lines for those of you that don't follow technical analysis, I'll explain them real quickly for you here. They're pretty simple. What you have is a 50-day moving average in that green line. That is the one line that tells you whether a stock's trend is your friend. We've all heard that saying. If the 50-day moving average is trending higher, there's a simple rule. There's a 2 to 3 chance that it's going to close higher the next day. So we have a bullish 50-day. This is the trader's view. The long view is coming in a second, but this is the trader's view. We got a bullish 50-day. This shorter one here, that red line moves a little faster. It's what we refer to as the trader's trend line here. It's a 20-day moving average. That's what the trading crowd watches, the people who make the stock move 20, 25% in a 2 or 3 week period, right? And then this other line, these pink envelopes, they're called Bollinger Bands. And I'm going to get a little technical here. It has to do with the distribution of the stock and the volatility, if you will. But whenever they get tight like this, it tells you that you've got the potential for a breakout. You can see right ahead of the last earnings announcement, the same thing. I keep using the term carbon copy. This is why. We've got volatility that has closed down, and whenever you have a quiet period in the market, a sector, a stock, it's usually followed by a breakout. And the fact that you've got those bullish technicals below it tells me that right now you look at the top of this range, right around that 625 to 635, call it 650, and this stock takes off as everybody feels like they've got that fear of missing out. So the technicals right now, the stock has gone quiet. It's a sleeper ahead of that earnings announcement with bullish technicals tells me if Netflix comes out with anything that is even remotely positive, this stock is set for another 15, 20, 25% move. I see $700 as a short-term target over the next 2 weeks. So we take off from the 623, 625 and add 75 points to that. That alone gets you up to that 15, 10% range. And then from there, a break above 700 starts a rush towards $750. That's your short-term opportunity. From here, a break of this quiet period and the bullish technicals leads Netflix to a $700 and higher price tag. But that is just half of the story. So let's think about the long term with Netflix. And I'm not talking about the last year. I'm talking about the last 3 years. This has been a company who has been through the ringer. I mentioned the subscriber numbers earlier, and the subscriber numbers started to fall off, and they actually stopped giving all the references to subscribers and started focusing more on the revenue. And that's how it should be. It's kind of like Tesla with their deliveries. At some point, you just start to guide people to look at how the company is performing, not those in-between numbers. It's a little different with the automobile manufacturers, but they've got people focused now on the business operations, not just one number at Netflix. It reminds me of another turnaround story and the sentiment. And this is where that chart comes in. Remember the chart that I talked about? There is a sentiment cycle, I call it, or it's a life cycle for a stock. Let's take a look at this because this is where things get really interesting. I call it the 4 stages of a rally or decline. And this goes for short and long term, but more in the long term. You have felt this before. I guarantee everybody out there has had this feeling before. Euphoria. And if you think about the AI names, if you think about the .com era, One emotion or one sentiment that is mixed or caught on with that is euphoria, that feeling like a stock can't go down. That is a historic warning sign. Whenever you feel like the market can't go down, it can't fail, you'll hear people talk about this stock is not going to go down. NVIDIA is one of those stocks right now that I would say has a high level of risk from the euphoria phase. What happens is that those companies are priced for perfection. They have to hit every single mark. And if they don't, they get punished. And when they do, the company starts to roll over, and then you're going to see the next stage in this cycle, which is disbelief. People don't believe that this stock isn't going to go up. It's a buy the dip. You have to buy the dip. It can't fail. It's going to go back to all-time highs. These are the kind of things you'll hear when we start clamoring about stocks and we feel that disbelief. And that means you're just a little bit into the way of the actual decline. After that, you have the acceptance phase. That's the third out of fourth, where investors and analysts say, hey, it is what it is. The stock is struggling and everybody starts to sell. And that's when the real madness. Right now, Tesla is facing that. People are accepting that bearish sentiment and saying, okay, I've got to sell it. The analysts are dropping their recommendations, right? And then you hit that final point, which is despair, the fourth cycle, and that's on the way down. That's where everybody throws in the towel and they say, I don't want to own this stock. I don't want to have anything to do with it. Get it out of the portfolios. The analysts all cover them with sells and they drop all their expectations because they expect the stock to do nothing. Key is that's the best time to buy a stock. Warren Buffett said it. You buy when everybody is fearful, right? When there's blood in the streets. That is that sentiment that tells you there's a turnaround. Look at the long-term chart. Keep this one in mind. Let's look at Netflix now. We had a feeling of euphoria back in 2022. It was part of what? The FANG, right? Remember the FANG stocks? The FANG stocks. It was one of those FANG stocks, and it couldn't fail the market until it did. They started to show us that, hey, from a fundamental perspective, the subscriber numbers are going down. We need to make a turnaround. We need to change our business model. That's a scary thing. So investors quickly started selling. Now, there was a period in here where you can see it. It was very short, and this was a fast decline, where there was a feeling that, hey, maybe you do buy. This little catch that we had right around that $600 level on the way down, right? And then you had that acceptance. The stock was sold hand over hand as quickly as possible. And then down here, and I love this because it happened at the same time with Meta. You saw a lot of the analysts walking away. Some big TV personalities saying, I did you wrong. I shouldn't have told you that this stock was going to continue to move higher. You know who I'm talking about. That's the point that you had at the same time with Netflix. So Meta and Netflix are sharing the same story, and that is that they have gone through this ringer. Microsoft hasn't done it. Amazon hasn't done it. Alphabet or Google hasn't done it. Only Meta and Netflix have been through this cycle, those 4 stages. And both of them have come back, remodeled themselves. And in both cases, that despair turned to acceptance because now the cycle goes the other direction. Disbelief that a bottom is put in place. You'll hear people say, Netflix is just going to go lower. This isn't a turnaround. And then finally, acceptance. That's that sentiment where everybody starts to say, oh my gosh, this is going to be something that's real, and the money starts to flow back into the stock. And then, of course, you get back to euphoria. Let's go back to Netflix for a second. Look at the article from Barron's here. Article from Barron's talking about how Netflix should be in the Mag 7. Now, this is kind of a reverse thing. It's a reversal because everybody's looking at Tesla and saying, hey, it's one of the Magnificent 7 stocks and it's failing. It's going through its own failures. But you've got Barron's coming out and saying, hey, this is another one of those magnificent stocks again, and nobody's still paying attention. If you look at the analysts right now, the buy, hold, and sell recommendations, if you look at those for Netflix, we've got 62% of the analysts that recommend it as a buy right now, 34% as a hold, and then 4% as a sell. Now, those 4% are going to make their way up to holds, but This is where your opportunity lies. Those expectations I talked about from the analyst community are going to start to increase. You're going to see these holds turning into buys. That's going to drive more activity. You're going to see more articles like Barron's. And that's why Netflix is now in the acceptance phase. And what does that mean for the long term? That means over the next 3 to 6 months, you're going to see more about Netflix being a new company again, a new story, just like Meta, right? Just like General Electric. We've seen a number of these turnarounds here over the last couple. IBM is one in the AI space. So Netflix is going to turn into one of these longer term stories. You're going to see more attention, people looking forward to the earnings instead of just kind of letting them be a sleeper. And that's where this stock takes off and heads to 1,000 and above. Let's look at the long-term chart, and this will be our last chart, and I'll summarize everything for you in just a second. Here you are right now with Netflix. Notice the stock is trading 12% off of its highs. So all-time highs, unlike those other stocks I mentioned, Microsoft and Amazon, you still have 12% to go before we take out that new high level. The new high is going to add another psychological level to this stock, and you're going to see right around that $700. And that's why I expected just a little bit of resistance there. But once it breaks 700, you're going to see everybody talking about new highs. That's that acceptance of that chart that I keep talking about, the sentiment cycle chart. That's going to kick in, and now you're going to have Netflix turn into basically a long-term FOMO. So where does it go from here? It is going to be one of the $1,000 stocks in the NASDAQ 100, unless it splits, of course. It is right now in vogue to have your stock price go above 1,000 and let the traders and the investors kind of beg for a stock split. But this is going to be a stock that's going to be the next 1,000 if they don't split, and it's going to continue higher. For the next 2 years, I expect you to see 50% plus returns as those fundamentals continue to drive that acceptance phase even higher, and a FOMO, almost like, not to the same degree, NVIDIA, but that fear of missing out that Netflix is going to leave the station. Longer term also from the fundamental perspective and my walk down Main Street perspective is going to be that idea that Netflix is going to be one of the few survivors of the streaming services. We saw Disney get into the business and really kind of get it handed to them, right? We've seen Warner Brothers. We've seen Paramount. We've seen Peacock with NBC. We've seen all of these new players come in, Hulu, NBC, et cetera, right? But we're going to go through a contraction in that business. And from my perspective, we're heading back towards a 3-network model or a cable TV model. We're going to have a couple of providers that are just going to aggregate all of that content and bring it to your TV channel or to your TV. And Netflix is going to be one of those survivors. They've got the production. They end it from the beginning to the end, the consumer. They are in a position to be one of those leaders. So there's your long-term opportunity. Let's rewind, give you a summary of everything here. We're heading into the earnings. I'm looking for a 15 to 20% move higher above $700, and it's going to continue from there in terms of the short term. The way I play that is if I don't own it, I want to buy it before earnings. If I'm aggressive, I trade an option on this. And that's another thing we'll talk about someday is the long-term leverage, the long-term opportunities you can get from leap options on companies like Netflix that are trading around $500 or $600. That's the way I trade the short term, though. I either buy the stock and own it in my portfolio, and then I add more positions if it dips down. But I think this is going to be a train that leaves the station and doesn't look back. On the long term, I expect you're going to see the stock double over the next year and a half or so, and continue higher as that acceptance phase really starts to take Netflix shares completely into another stratosphere, and everybody gets on board with what used to be FANG, and maybe we see it replace and get into that Mag 7, but that's the kind of sentiment that you want to see driving the stock even higher. I'm looking for 50% until the end of the year, at least at minimum. I think we return that. Market's going to give it some headwinds. Nonetheless, I think it outperforms because of it beating expectations here. It is one of the stocks that you want to hold in your portfolio if you are a technology investor or just trying to grab onto the NASDAQ 100 and some of its leadership. There you have it. That one simple chart which is really simple, 4 stages. It applies right now to Netflix and Meta. Those are the two that I love. Tesla, the other direction. Netflix is a long-term opportunity and a buy. Have a great day. Make sure you like and subscribe. Get more of this content. We're giving it out often here. Love to have you here. I hope you have a great day. And as always, I wish you the best trading success.